Back in June and July, everyone was expecting the IPOs of Reliance Retail and Reliance Jio for multiple years. But what happened? A secret company without any such warning actually came into the scene. Jio Financial Services got demerged from the Reliance industry stock and then started shooting up. So there was a lot of hype, a lot of news around the stock at the time, but since it has died down. On the other hand, we have gotten a lot of information about it in the last multiple months as well. So the question that everyone wants to know, what is the company doing now? What is the valuation at? Is it the right time to buy? Without further ado, let's get right into the video. This is Ajay Ajit. Welcome to Market Feed. So before getting into the topic of valuation, the company is already the second largest non-banking financial company in all of India according to market cap. It does not have much revenue. It's just starting all of its businesses. Still, it is the second largest company here. So what you have to understand is that Jio Finance is a mix of multiple companies that you can see or relate to in the current market. So going ahead into the future, Jio Finance is going to be a holding company for all of its multiple payments, insurance, and even lending businesses. So the first lending business, who is going to be the major competitor there? Bajaj Finance. Let's take that. You can understand or compare Jio Finance, the lending business, to Bajaj Finance there. Then there is a payments bank and the payment services. You can compare that to a listed stock like Paytm. And for the insurance broking business, you can compare it to Policy Bazaar. And for the last, which is its mutual fund business, and for the investments and mutual funds part, you can compare it to any other listed company like HDFC AMC, which is issuing a lot of mutual funds in the country. So that is why I like to call it a full stack financials company. It is handling all the parts of a life cycle of a consumer, right? Right from paying at its local shop with the payment solutions, going to take a loan, going to take an insurance, and even going to take a mutual fund investment. So Jio Financial has all the services that any person in India would need over the next multiple years. So do not worry why the stock was demerged all of a sudden. There were certain reasons behind that as well. So as an NBFC, as a non-banking financial corporation, a company is not supposed to take in consumers' deposits or savings. So unlike a bank, they cannot have savings or current accounts, but they still have to lend money. So to do that, what will they have to do? They'll most likely have to raise money through selling bonds. So if this company was still integrated into the Reliance industry stock, it would have messed up their balance sheets and assets and liabilities column. That is why Mukesh Ambani decided to demerge the company into a separate entity. So out of all the business verticals, let us first look into the lending business, which is Jio Finance itself. Let us look into that first. So it is a AAA rated company. What does that mean? That means the bonds are of the highest quality possible just because it is coming under the Reliance group of stocks. It is only one of the 4 NBFCs in India who enjoys the AAA rating. That means whenever they are selling a bond, their bond can be sold for the lowest interest rate possible. Because for an NBFC, their profit is whatever interest rate this loans that they're giving to customers are for, and minus whatever interest rate they're raising the money from. This is going to be their profit. So whenever this interest rates on the bonds or the money they're raising at is lower and lower, their net profit will be higher. So automatically, this puts Jio Financial ahead of all the smaller lending businesses, the listed and the unlisted ones in India. So the first advantage in the lending business is this AAA credit rating, and the second advantage is the Reliance's massive customer footprint. So Reliance Retail has 18,000 stores across the country and 450 million Jio subscribers as well. So out of all this, these are our potential customers. In fact, this is one of the few business verticals where work has already started. Nearly 300 stores in the country are piloting the consumer durables loan program. That means that whenever you go to buy maybe a fridge, a TV, a washing machine from a Reliance retail shop, always you would have been offered a Bajaj Finance as your lending option, as an EMI option, and from now on, Reliance will be the ones who are personally going to lend you that money. There is a lot of money to be made just in this consumer durable space, and out of all the Jio subscribers whose data they have access to, again, data is going to be the new oil, right? Data is already the new oil, and out of all this consumer data that they have, they can choose who to give the personal loans to as well, and they can get started with the personal loan and the consumer durables its loans very immediately. They can move faster than any of their competition. So talking about competition, the first company that comes into mind would be India's largest NBFC, which is Bajaj Finance. And let's talk about their numbers for a bit. In financial year 2015, the company's net profit was only under 900 crores, and right now it's 11,000 crores for FY23, and for FY24 it will be nearly 20,000 crores. So such a crazy growth is what Bajaj Finance is seeing. So I know there is a lot of noise around the other business verticals of Jio Finance, but I think this will be the cash cow for Reliance and this Jio Financial Services company. So now that the lending business vertical is done, let's quickly get into the insurance broking part of it as well. So no major things there. It is going to be a insurance broker. That means they'll have multiple insurance to offer and sell you, just like maybe a policy bazaar that you can imagine. So according to their quarterly update, Reliance has already started moving on this business. Nearly 24 partnerships have been made with multiple companies in the life, auto, health and all insurance sectors. So do watch out for that in the coming months. Again, the competitor Policy Bazaar has not been doing really great over the last multiple years of its existence. But again, Jio comes with its a wide range of customers and obviously a second mover advantage as well. They know all the mistakes that their competitors have made in the space. They have access to the consumers and they can quickly take decisions which will take this vertical quickly into profitability than its competitors. But I don't expect it to blow up anytime soon. So in between all this public consumer facing business verticals that I wanted to discuss today, there is also one hidden business vertical that you should know about. It's called as Reliance Industrial Investment Holding Corporation, and this is one of the major reasons why this company, I would say, going ahead later, I would say it is not as overvalued as you think, because this is purely an investment or a holding company. And what is this holding company actually holding? It is holding nearly 6.1% shares of Reliance Industries itself, and that alone is worth 1 lakh crore rupees. It is also one of the reasons why the company has been reporting good revenue and profits, because out of all these shares that they're holding, they're getting a lot of dividend payouts. Nearly 140 crores is what they got just last quarter from dividends of Reliance Industries shares. So yes, moving ahead, next is a business venture which has made a lot of news in the market, because JioFin has tied up with none other than Blackrock, one of the largest asset management companies in the world, with an AUM, asset under management, of $10 trillion. So with all of this news that is created, the hope is that they'll turn into one of the largest asset management companies in India. A 50-50 joint venture has been launched and it is yet to be seen what all will be offered there. Again, some basic assumptions, what we have learned over the last multiple months, we can discuss that here. So talking about the potential here, India's current investment AUM, right? So mutual fund investment AUM is nearly 15% AUM to GDP ratio. And comparing it to other large countries in the world, they have nearly 75% AUM, asset under management, to GDP ratio. So as you can see, there is a long way to go for our Indian investments market, and Jio has come in at the perfect time. What we understand is that they will be definitely leveraging their distribution network. They'll also be moving ahead with the experience of Blackrock, which is widely regarded for its passive mutual funds or passive investment opportunities. And that is kind of where the world is heading now as well. If you have seen this video that we have talked about here, a lot of active mutual funds where there is a fund manager is picking what stock you should buy and sell, or in that mutual fund portfolio, again, all of them are getting outperformed by indices themselves, like Nifty 50 or even Nifty 100. So the understanding here is that this Jio Blackrock partnership, they'll be launching multiple mutual funds which are mostly going to be passive mutual funds. It is where the world is going at right now. It is what even Zerodha has currently launched. Passive mutual funds like index funds is what we can expect. But definitely it will not be a smooth journey. It will take multiple years to get licenses in this space, and that is what can slow Jio down here. So next, let's talk about the payments vertical, which has two verticals there, the Jio Payments Bank and the Jio Payment Solutions Limited. So these are companies which will be having the payments bank vertical, where the company is allowed to take in savings account, right? You see what is happening here, right? So all of these companies, they have different rules and regulations. They're bypassing it, bringing it all under the same umbrella. And NBFC could not take any credit or savings accounts. But here the Jio Payments Bank, they can actually take in in savings accounts, but they cannot issue any credit, right? So they can take in customers here, and the payment solutions is nothing but you can think of it as a simple UPI app that they've already developed. This will ensure that daily active users will be coming onto the product. They can be advertised the products, other products which are investments, mutual funds, their insurances, their lending, their personal loan business as well. All this can be advertised using this payment solutions business vertical. So yeah, these are all the business verticals of the company. Now let's get into the pros and the cons of Jio Financial as an investment. So the first pro is that for you as an investor, it is a full stack financial company. There are not many other listed companies out there which offer an insurance arm, which offer a payments bank, which offer an NBFC, and all of this under the same umbrella, right? So for you as an investor, it could be a good opportunity to invest in a single go if you believe in the Reliance brand. The next pro is that they will have a second mover advantage, which sort of you can think of as an Apple model. So what does Apple do nowadays? They do not come out with cutting edge products right along, right? They see what their competition is doing, they analyze what their competition is doing, and they come out with products which are better, which can kill off all these early stage products. So the second mover advantage is something that JioFin will definitely enjoy. And because India is getting modernized, a lot of processes, things are changing, Jio can build on that base. They can build themselves as a modern company which is backed by AI tech, which is backed by new processes and services, so that they can build a strong foundations for their company going ahead. And the next thing is the Ambani effect. You've seen it with Jio, how they came in with cutting edge technology like voice over LTE back in 2016. They killed the competition. Nobody was even talking about 2G or 3G anymore. It was just 4G that they brought to the table, the latest and best technology. And similarly, we can expect that here as well. Ambani's brilliance, which can take this company to next heights. And the last part, as I said, the lending business is what I'm super bullish on, and there the AAA rating that the company enjoys due to it being in the Reliance group of companies, that will be a big bonus for the Jio Finance company. Now let's talk about the cons or disadvantages that you'll have to know about. The first thing here, or the first problem here for you as an investor, is that it got listed without any business to show. Multiple business verticals, they do not even have the licenses to operate. For example, the asset management business, that will take at least 1 to 2 years. So that is a second disadvantage as well. All of these licenses, they can take time. It is they have to deal with multiple regulators here. For payments and for lending, they have to deal with RBI. For the mutual fund investments, they have to deal with SEBI, right? And for the insurance broking service, they have to deal with IRDA. So all of these licenses and processes will take time. Even though Ambani has brought in Mr. KV Kamath, the founding member of ICICI Bank, as the executive chair of the company, still all these processes, you'll have to give it the time that it deserves. And the last con, because we mentioned the Ambani effect here, the last con that we have to discuss here is the Ambani effect not going perfect always as well. So let's take the easy, simple case of JioMart. JioMart has not been a success story. It has not been able to compete with other startups in the same space. So yes, there is a side in which Ambani has not cracked all the industries which he has gone into, but the majority that he has gone into definitely have been successes. Now let's get into the question of valuation. As of recording right now, the stock is near trading at near 250 rupees, and the current valuation, the market cap of the company, is near 1.5 lakh crores. That's a huge number. But do you remember what I said earlier? Ambani has given it a lifeline, an umbilical cord tying back to Reliance Industries, and 6.1% stake of Reliance Industries is what this Jio Financial holds. That alone is worth nearly 1 lakh crore rupees. So what is left? That is nearly 50,000 crores on the table of market cap, which is being decided on businesses just for their future value. And what does that compare to? Let's take the case of a business like Crore, which demanded a valuation of $6 billion. That is nearly 48,000 crores. Again, just talking about Crore here. So Reliance definitely has a massive distribution. They don't have to spend as much on ads or acquiring customers as all of their competitors, and hence this valuation that Crore demanded in 2022 of 48,000 crores, and on the other side 50 to 55,000 crores is what is being left on the table for Jio Financials. So that alone, this payment solutions and lending business alone makes sense for it. Even when you're talking about someone like a Paytm, their payments bank have not been a success. In fact, not any of India's payments bank have been massive successes. But even Paytm, if you saw the recent news, they're not able to provide loans of their own because they're not an NBFC on their own. They've tied up with Aditya Birla Capital for that. So Jio does not have any of those problems because they're a full stack financial company. They have all of the businesses that they need. All they have to do is do it in the proper way. And personally, I will be investing in the stock. I'm not a SEBI-registered research analyst. I'm not asking you to invest, but personally, I'll be investing in the stock because I trust the valuation. I don't feel it's overvalued because nearly 2/3 of the valuation currently comes from the Reliance shares alone. And what with that 1/3, I'm willing to give it a gamble, considering it a startup stock and believing in the aggressiveness of Mr. Mukesh Ambani. So that's it, guys. Let me know all of your thoughts here, right here in the comments down below. This is Ajay Ajit signing off. See you with another video. Bye bye.